What is going on, everybody? Welcome in to another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Tuesday, March 14th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood, and we got us an action-packed show today.
We do. We have a lot. I was booming things left and right in pre-production, folks. That means you know it's going to be a good show. Stu tries to jam as many stories as he can down our throat, so I have to act as the buffer between us and Stu, or else we'd be here for hours. So we have as he mentioned, an excellent show lined up. Of course, we're going to talk Silicon Valley Bank. First article we have is, while Silicon Valley Bank collapsed, top executives pushed woke programs in news that would shock nobody. Silicon Valley Bank was invested in some interesting stuff, specifically in the climate tech space. So we will cover what is happening, the fallout, and what it specifically means for energy tech. It's been pretty crazy today for SVB. We will cover it all. Next article, how Germany plans to phase out oil and gas heating. The rest of the title really should say, and plans on freezing to death, but they left that out. So Stu will cover what's going on in Germany. Some absolutely incredible stuff that's coming out of there. Next, Texas power grid may need breath of God to keep cool in the summer. That's scary. The undisclosed location might be getting a little hot this summer, it sounds like. So Stu will cover our shaky power grid and what's going to happen specifically in Texas this summer. Next, we have 5 ways the Biden administration is still coming for your gas stove. I mean, it's unbelievable if they want to ban gas stoves, but Stu, apparently they're still coming at you. So Stu will cover what they're trying to do on that front. And then finally, we will cover the approval of the Willow Project. We covered this on Friday. ConocoPhillips and their 180,000 barrel per day Willow, Alaska project. The actual was approved today, but there's a very interesting but that goes along with this announcement. Title of the article is actually, Biden declares U.S. Arctic Ocean off limits to new oil and gas leasing. If you can imagine, that's the title of the article, in which we will cover the approval of the Willow Project. So if that gives you any sense of where we are headed, I hope that does. He'll kick it over to me. I will cover everything that has happened in the crude oil and natural gas markets. I mean, it's really not much. Headlines really, people are trying to tie in the drop in oil and gas prices today down to 77.70 or 74.76 to the SVB collapse. I mean, it has nothing to do with that. They're trying to also then say, well, there was positive China news, but we also dropped today. So it's a mess over there. Mainly it's these stories, Stu. But before we get going, again, check us out online, world's greatest website, EnergyNewsBeat.com, dashboard.energynewsbeat.com, the best place for all of your oil and gas and energy data news. You know, we're hard at work here on V2, Stu, so I'm excited to see when that rolls out. Again, hit the description below. All the articles that we're about to cover are available there. EnergyNewsBeat.com. I'm out of breath, though, Stu. Where do you want to begin? It's a big show.
Yeah, it's a big show. Okay, we're going to start across the pond. All right. Then we're going to work our way back around the world. How Germany plans to phase out oil and gas heating. Okay. You can't buy this kind of entertainment out there. Now, they are not going to be able to fill in 2023, 2024 winters. So natural gas is going to be a problem. I just interviewed Osam Rizvi from Pakistan, and they didn't even get a LNG tanker because of the issues there in Pakistan. So LNG is still going to be king, but let me drop into this article here for a reason. Since about half of Germany's households are still dependent on gas and oil, switching to alternatives is costly and simply not affordable for many. A heat pump costs $11,000 for a single family home. Michael, the problem with a heat pump is it runs on electricity. How's Germany increasing their electricity? Coal.
Yeah, I was gonna say that they want to get you on a heat pump and you on solar to provide, and then they're providing you the electricity to run these things from coal. So you have to pay for the higher energy costs, and they get it cheaper.
And then they want you to pay $11,000. I can't afford that right now. And there's so many folks that cannot do
The
that.
deal. What do you mean? That's a steal.
You first.
I blinked.
Yes.
It's like a Mexican standoff.
Yeah, I'm over here I'm going to start, instead of the Me Too movement with all the women coming forward, I'm starting a you first movement. Hashtag you first. Okay, here we go. Let's roll to the next one here. 5 ways Biden's coming for your gas stove. Oh, this one rolls into the same shift here. Same story, different continent, and same chowderhead logic. So when you take a look at the U.S. heat map, the oil is used more up in the East Coast, and they import that from Russia over the last 5 years. You take a look at natural gas in the rest of the area, they have the lower cost everything else. So what they're wanting to do is put in heat pumps up here. Let me see where it was in here. Oh, included in the Inflation Reduction Act is an $840 rebate who buys a new electric stove. This adds to other state incentives to go to electric. And there's also the electric for going to a heat pump. I don't know if it's in this article, but it's also in the Inflation Reduction Act. So it may be in a different article, but it's still a rebate tax to move to electric. And it's in this area, they're still coming after your natural gas stove.
Well, yeah, and I think there's a very interesting quote in here from this article that I think falls in line with something, Stu, that you've talked about, which is, and now I'm spacing on it.
Cool.
No, it's the idea that instead of outright legislating it, legislation through regulation. Think about it. Look at this paragraph. DOE recently proposed. So this is after the administration come out and had this whole hoopla of, hey, we're going to ban gas stoves. Then they said they weren't. Remember, that was like 2 months ago. Then they come out and say, DOE recently proposed its first ever energy efficiency standards for residential stoves. Those such regulations are supposed to be fuel neutral. The agency's proposal stands out for hitting gas stoves much harder than electric versions, according to the Association of Home Appliance Manufacturers, which represents makers of both types of stove. Not only would the rule likely boost the cost of gas stoves more than electric, but would jeopardize some of their features. And the final sentence is the scariest. It may even result in the max setting on gas burners having to be reduced in order to comply. So this is what they'll do. They will not outright ban it now. They're just going to they're just going to regulate the crap out of it. And next thing you know, all you're going to have is basically a match. That's all you're going to have.
Right. But, it's like forcing the Germans to do the same thing, forcing everybody to go to heat pumps. Tracy Wood, who I dearly love, he's one of our good friends of the show for a long time. I haven't talked to him in a long time, and I need to give him a call. But he's out advocating for heat pumps because it makes sense in some markets. Now, let's take a look at it in a by market thing. I'm not all in on regulations because you can. Legislation through regulation because you can is not right.
I just keep thinking of taxation through representation. Every time I want to try to pull that phrase out of the tent, I just think of two guys, Stu, standing there, because you were present at the Boston Tea Party. Little known fact to the viewers, Stu was actually there at the Boston Tea Party.
It was my idea. And
exactly.
And I was one of the original Tea Party members here. Everybody thought that was funny. Redone.
What's next, Stu?
All right, we're rolling to the next one here, dude. Let's go to Biden declares U.S. Arctic Ocean off limits to new oil and gas leasing. The paradigm dichotomy of weirdness that this administration is putting off as an administration. Energy administration is horrific. Let me explain this just for half sec. I have to applaud them for about 1.2 nanoseconds. Yay. They got into a bind and they did approve part of the Willow project. There's going to be 3 pads that they're going to do. Those 3 pads are going to bring in 180,000 barrels per day. It's going to take about 3 years to do that because of the seasons. You and I talked about that the other day, yesterday or day before. But this cuts out how many thousands of acres? The new restrictions on drilling could potentially undermine incentives for further oil and gas development. If they go far enough, it will shut it down. Now, here's the thing. So they got the Willow project almost like a grandfather in there, and then they're going boom, smack. It's like hitting a rented mule with a newspaper. They are absolutely beating the snot out of it. And the Alaskan folks, my son lived up there and he loved getting that check. He loved getting the check. And Alaskans love oil if it's done correctly. ConocoPhillips is doing it right. So, all right.
I think there's again, you said the dichotomy of this is very interesting. And, you know, if he's going to approve an oil project, you know, he's going to give some red meat back to his base. I mean, that's what happens. Anytime a politician does something opposite of what their base wants them to do, right, they got to toss their own a little bit of red meat. Okay. Oh. And so in this case, what does he do? He says, okay, we're going to go ahead and make sure that no offshore drilling ever happens, which I'm not an Alaskan expert, but do we really need Alaskan offshore oil? Like, is there that much oil offshore that we need it? Like, are there companies that would invest? You know more about that. Don't answer, but I know you know the answer. Secondly, the second part of the plan is, again, one of those kick the can down the road and allow really my lobbyists to continue to lobby and get paid so that we can debate whether or not, because what is it this is the quote, as part of the conservation plan, the administration will also move to issue, the key is will move to, not now, they will at some point, move to issue new federal rules limiting oil and gas leasing on 13 million acres of the Alaskan National Petroleum Reserve. I mean, it's called the Alaskan Natural Petroleum Reserve, and we have to figure out how to permit it. It's hilarious. But so now they're kicking the can down the road and allowing for more litigation. I mean, it's a lawyer's dream.
It is. And unfortunately, in 1960, my grandfather, who was a very key reason in the Cook Inlet and up in the North Slope, discovering the North Slope as one of the key geologists on that. I believe that there is some serious reason to do it. And then the Alaska pipeline is only like 10%, maybe 5% used. If we use that, we wouldn't be buying oil from Russia. Anyway, just thanks. I just went
simple. What's next?
Yeah, my head exploded. Texas power grid coming around the corner. Texas power grid may need breath of God to keep cool in summer.
Great.
I love this one. Texans will be relying on the breath of God to keep the lights on, he said in an interview. This was Greg Abbott, who contends that the state's grid is becoming too dependent on intermittent wind and solar resources. I'm sorry, I do like Governor Abbott. I think that he does a lot of things. I have not agreed with everything, but in the bottom part of this article, it also says small nukes are needed for ERCOT. I couldn't agree more. You know, let's keep the wind and solar that's there until its maintenance won't allow it, and they got to just abandon them. But on the other hand, I just put that out there for fun in case anybody was listening today. But on the other side, the small nuclear reactors offer a very, very nice base load. We have 2 locations, 4 reactors that offer some serious baseline for the ERCOT. Okay.
Yeah, I mean, send me one of those modular reactors. I'm gonna need one to stay cool. I mean, if I swear, if my power, I'll tell you what, folks, you better brace yourself. If my electricity or my AC gets turned off in the summer, while we're or like before we do a show, the entire show will be me just ripping ERCOT apart. You'll see me sweating. You'll just see, the shirt will be off. It'll be
No,
crazy.
no,
The entire show will be dedicated to me
yeah,
trashing ERCOT.
no, we won't. I'll be doing a solo show, and everybody will be thrilled out of my mind that I pulled an executive order and gave you the night off to do an assignment to go get pictures of the blackout.
Perfect. That's actually a good move.
Okay. And the last one is back down into the Silicon Valley, and you need to head this charge up.
Well, I mean, first I think as everybody, I'm sure if you're, you watch the news, if you're on any social media for a fact, I think you've seen the updates with Silicon Valley Bank. And as we record this on Monday night here, it's about 6:30. We didn't comment much yesterday other than kind of give everybody a little heads up when we recorded that on Sunday night of like something's coming. I think we both said they're going to guarantee depositors, which they did. The Fed came out this morning and said specifically we are going to guarantee depositors up to 100%. And I don't think that necessarily comes as a shock to anybody. I think you can debate whether, I think there's good arguments on both sides of the equation of like, should depositors have been guaranteed? I think on one argument you should say, yeah, I mean, who has time to do bank due diligence? Now you're telling me I need to start doing my bank due diligence. I don't have $250,000 in cash, but if you're at any type of reputable business and you don't have $250,000 in cash, I mean, what are you doing? I mean, Stu, come on, what are you doing, man? I'm just kidding.
I'm working for a living, baby. Yeah,
I know. No, but so there's that argument. There's the other argument of, well, let's slow down here. The FDIC has a protocol for basically reallocating capital back to depositors. So what happens when a bank fails is this: all the cash that's there gets distributed. The FDIC covers everybody up to $250,000. Then what they do is they go through the assets that the bank has and begin to sell those assets in bulk or individually. And as you bring in capital from those sales, you reallocate to depositors above $250,000 or the rest of the leftover capital. Mm-hmm. And in this case, from some of the analysis I've read, depositors, if the bank would have been allowed to fail and under the normal FDIC process, they would have maybe taken it. Depositors would have gotten 90 cents on the dollar back. So we're really talking about a 10% haircut in what depositors would have seen in 2 months versus what they see today. And that's the other difference. There's a timing difference. The FDIC wouldn't have that money available right now. The $250,000 would be available, but the whatever was in your bank account wouldn't be available until whenever those asset sales got placed.
Right.
So that you could pull me down on either side of the argument, but there's a very important thing that the Fed also announced today, which is even scarier, is they went another step further. Not only did they basically tell all banks, hey, we're going to guarantee deposits to whatever limit, right? They announced a new federal lending program. Okay, so let's walk through the steps here about what happening, how, because one of the key announcements in the Silicon Valley Bank bailout, I'm using quotes, let's not call it a bailout, we'll call it a depositor guarantee, was that the taxpayer will not be foot the bill. That was one of the first things that Joe Biden said. Okay, so how does that happen? Well, the Federal Reserve is the one that is providing the backstop, which, okay, true, technically that's not the taxpayer. But guess what's happening? So what got Silicon Valley mixed up in the first place is they took all the deposits that people had, right, and they traded them for illiquid private market assets, mortgage-backed securities, equity in private companies that have no that are very illiquid. Think of the most
Mhm.
illiquid things you can think of. Gold. I mean, gold's even probably more liquid than what they had. And held that on their balance sheet to meet their minimum of to balance their balance sheet, to be pun intended. Okay.
Right.
So then as withdrawals happen, you eventually have to then keep going to your assets, these mortgage-backed securities, these U.S. Treasury bonds, these things that you've purchased that are in illiquid markets, and sell them at the market price of whatever it's trading at now, regardless of where you bought it at. They were having to sell. They've been selling treasuries and mortgage-backed securities at a 30 to 40% loss for like 3 weeks now. And so then what? So now, all of a sudden, you're in this precarious position where you're left with no cash and all of these illiquid securities, whether, again, mortgage-backed securities, treasury bonds, some that's not as liquid as maybe cash is or maybe stocks are.
Right.
How do you get cash quickly? Well, the Fed came in and today, on top of guaranteeing deposits, announced a new lending program. And I want to read you some of the language here. This is from the Financial Times. I think they do a great job of breaking this down. They say the so-called bank term funding program will offer loans up to 1 year to lenders that pledge collateral, including U.S. Treasuries and other, quote, qualifying assets like mortgage-backed securities, like all these other things. And this is the scariest part, Stu, which will be valued at par. Whoa. What does that mean? Break that down. You buy a mortgage-backed security. I give you $1,000, Stu. You turn around and sell that $1,000 or use that $1,000 to go get a mortgage-backed security valued at $1,000. The value of that mortgage-backed security drops to $500. I come to you and need my $1,000 back. You say, I don't have your $1,000. I have $500 and $500 worth of mortgage-backed securities. So what the Fed just said is we're going to open up a lending program that we will buy your mortgage-backed securities, Stu, for at par. Well, what's par? $1,000. So basically, they will give you $1,000 for something that's valued $500 on the market as another backstop lending program. It's unbelievable what they've actually come out and done today. And it's the second thing nobody's talking about. Everyone's talking about depositors versus this. And I think that's all well and due. But it's the second. I'm gonna be on this for a while. The bank term funding program is, I think, one of the scariest things they've rolled out. Because now what they basically said is any bank can do whatever they want. And when they mess up, it really is. The idea of too big to fail what's crazy is the idea of too big to fail was a Democratic thing. Like the Democrats, Bernie Sanders made his name saying the term too big to fail. And now in 2023, I'm on the Bernie Sanders side. These banks are too big to fail. And they keep getting more and more help. At some point, you can't, it's just insane. I could go on and on about this, but I think that's the most important fact to note is this bank term funding program, which basically guarantees that no bank will ever go under, which, that's insane. So it goes beyond the deposit. What this has to do with circling this all back to what this means for energy, I think it's clear. Silicon Valley Bank was one of the few companies that backed and provided venture debt, provided products that allowed founders of startups and founders of Silicon Valley tech startups and everything you want, gave them capital to be able to really large majority of climate tech startups banked with Silicon Valley Bank, and they were a huge proponent of that. And the article that specifically says, while Silicon Valley Bank collapsed, top executives push woke programs. Again, it's not hard to figure out that Silicon Valley Bank was dumping a lot of their resources into propping up the climate tech industry. And, I'm all for innovation. Now, when you're trying to tell me, again, Stu, I kind of want your thoughts specifically on this article, but I think in order to understand what's going on with SVB, it's important to understand that banks don't keep your money around. You give them $1,000, they immediately ship it out and try to do something with it. And so now if you're telling banks that we will cover the value of the illiquid assets that you purchase at par, what incentive do you have to keep cash on hand?
None. Man, the other thing is, you can't tell me as a bank guy and a finance guy that you're not seeing that the Fed was 2 years too slow and too stupid to fix inflation. And then the Biden administration was also printing money. You can't hold on to their assets for that long without being a guy like, I hate to say this, what I've been accused of is being a moron. I'll be the first to admit I'm a moron, and that is moronic.
You're absolutely right, Stu. I think you bring up an interesting point. The Federal Reserve created the environment in which interest rates were zero and banks were incentivized. Banks were stupid if they were not taking all of your money and dumping them into U.S. Treasuries because the spread was so much. You're getting 0%. There's 0% interest rate. Okay. So then Fed creates that environment of low interest rates, which increases the amount of cash on hand, which then eventually increases inflation, which means they have to come in and raise interest rates, which lowers the value of the illiquid asset that these banks purchased in the first place. And now the Federal Reserve is looking at them like, and now the Federal Reserve is there to hand you a backstop lending program. So it really, I mean, if you think they care if you're a Republican, if you're a Democrat, they hate everybody. Okay, they don't care a lick about you at all. It's all about the sick cycle. I mean, why not have a public bank at this point? I was listening to a podcast this morning and they brought up a good point. They're capitalists. They were making a joke, but at this point, why not just have a public bank? There's no difference. Why privatize? Why should bankers make any money at this point? What's the job of a banker? Tell me, you now with this new lending program, you cannot tell me, you'd be hard pressed to find me now one thing a banker can do. Who cares? Sure, give them the money. Why do you need a credit team? You could literally fire your entire credit team. Save a lot of money.
It's one step closer to the government having all the control in the world. And that's why when I got a call from my CPA saying that all of your Zelle and your PayPal and everything else is going to be audited for a corporation. Make sure you designate it. So no, all of this is an effort to get more control of personal finances. Opinion.
I've seen that floated around that, hey, why, let's let these regional banks fail. Let's roll everybody up into 3-4 banks and then roll out USD coin. And I'm learning, Stu. I'm learning.
And that ain't no conspiracy theory from me. We're already seeing it.
So that's a long-winded way of saying that's what I think the scariest part of SVB, and I think it applies to.
That was a great point, Michael. Great point. Did I compliment you? Sorry.
Yeah, I'll pat myself on the back later. You got anything else, Stu?
No, my head just exploded.
Yeah, no kidding. So I'll quickly pivot. We'll cover some oil and gas pricing stuff. On the oil side, again, we're recording this Monday, the 13th at about 6:39. Oil trade 74.61. Again, the dollar dropped today in wake of all of this banking news. Ironically, the NASDAQ was up 0.8 of a percentage point. But cash markets, in terms of the dollar index, was down, and that's really what drove oil down. Specifically, I would have thought oil would have actually done a little bit better. Specifically being it more of a commodity and a physical asset in a time like this, especially something as, pun intended, as liquid as crude oil, would be easy to move, but it's going to trade much with the dollar. I love how Reuters tries to say, oh, well, China had a big demand, exceeded some demand numbers, and nobody cares. Everything's tied to the dollar right now. So, they just got to feel like they're, some poor journalist over there just got to feel like they're doing their job and just, type, it's probably China. Yeah. Yay. Send, editor approved.
This week.
Yeah, just this week. On the natural gas side, we did see a little bit of a pop, currently trading $2.63. Again, that's mainly because weather this week does look a little bit colder than usual. We are expecting a pretty, I would say, an inflection point when it comes to storage builds or storage withdrawals in the natural gas. NGI is estimating that we could see on Thursday anywhere between 42 to 120 BCF draw from the reserves, which tells you expectations. It tells you a lot of different stuff about where people's minds are at. You've got people who are clinging close to this. Warmer weather is leading towards a smaller bill or smaller withdrawal, or people looking at more of a global, we're seeing things go. They're going to be more on that bullish, or they're more on that bigger draw side. So I think it's interesting. I'm going to come down closer to 40 than 120, but it's early in the week. It'll be interesting to see how things play out. That's really the only thing. We're out of earnings season, not much on the M&A front. Everything is a little, as I mentioned yesterday, it's a little all quiet on the Western front for the oil and gas market. So, there's stuff brewing. It's a little bit behind the scenes. But we'll bring you what we've got. You got anything else for the day show?
Nope. Other than a headache.
You need some aspirin after today?
Yeah, I'm gonna deny that I'm gonna testify against Hillary. That's one way to get a headache.
Yeah, you better, I don't know what to do with that, but we're going to let you guys get out of here on that one. Thanks for checking us out, guys. Energy News Beat Daily Podcast. For Stuart Turley, I'm Michael Tanner. Stay safe out there, folks. Check your banks.